Join Samantha and Hans at the next Macro to Micro Options Power Hour held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description.
Don't just sell calls because something's going up, right? So I read a great quote earlier today. It was from a floor trader from years and years ago. Literally, I read it 40 minutes ago, and it talked about how you really become a great trader once you learn the ability to add to a good position. And so in this case, I'm saying you don't necessarily have to add to a position, but don't get in the way of something doing well. If you don't have any kind of edge from a trend line, maybe a monthly. I love how you look at things from all these different perspectives.
2 hour to 1 month.
It really, yeah. I mean, it can all make sense, right? It's always important to kind of zoom in and out, forest for the trees kind of stuff. And so I love that because you can really get caught in the noise in the moment especially when you trade markets actively, you can really, really lose yourself in the minutia of what's going on and forget about sort of the bigger picture. And so, with covered calls, you want to just make sure that you're getting edge from somewhere. It's either in volatility, it's either on the technicals, it's either in news. It could be as simple as whatever. There's a big lineup around the block for the new iPhone, whatever it's all edge, whatever it is, but have some edge. Do not just sell calls into a rising market, especially if volatility is getting crushed and you're getting less and less sort of compelling reason to do so. So, let it go. Let the move happen. Let it tell you when it's starting to top out. You're not going to pick the top. Very few people are that good, but you're going to look for some sort of indication that a top is forming or that a consolidation is happening and some sort of, kind of pattern that leads you to believe that things are kind of, sort of calming down a little bit. And then that's where you can start to pick away at those spots. So, but if you're long stock, you could collar it here. One of the nice things about collars, they're relatively option pricing agnostic. So if you are nervous, you can say, well, look, I'm willing to give up my stock at a certain point. I think the narrative's changed. I'm not thrilled to be long it at this point. So, but I want to hold on. Maybe I have a really low cost basis. So you can sell like a March 135 at 820 and then purchase a downside put, or maybe a put spread would be better unless you think this thing could really, really collapse. So that's a nice way to protect the downside there.
And let me just show you a trade that Mikey posted from his channel today for you to do some sleuthing. Do you see this right here? Large equity trade came in right after the open. They sold a lot of Nvidia. Can you see that amount?
Wow.
But look what they did. It was tied to this, where they then did a bull risk reversal, basically, same strike, May 125, which is just a few dollars higher.
Puts on the call. Yeah, that's
they did a synthetic. What do you think about that? Synthetic
short stock, basically. They're just getting the heck out. They're just getting the heck out of this thing. They don't want a part of this thing anymore. So that's
what I wanted. That's what I think is happening that people aren't seeing. They're in May. So, yeah. And this is that synthetic, like you said. Is it replacement or are they?
It depends. You need to know a little bit more information, but it's basically they're just synthetically selling stock there. So they're selling stock. I don't know what's tied to what in terms of the actual stock, the upper position, but they're basically long put and short the call at the same price is just short stock, right? You're selling stock effectively. Yeah. So that's just, basically you're selling stock. So I'm not sure what that's tied to, or if that's,
we don't know what their portfolio is. Correct. I'm just saying, but that's the kind of thing underneath the surface, because I have this thesis, right, that there are investors that, not the ones that already got out, the 17% drop that, retail came in, by the way, and bid up. There was a big piece on this that came in and bought like 600 million. Retail bought 600 million. Yeah, but it dropped 600 billion in market cap. Okay. But the point is, there's some selling underneath the surface. That's all I wanted to say. It's going to be.
Yeah, I mean, you have to think that a lot of people are sort of going, well, this isn't the story that it was for a long time, so I'm just going to get out. Now, I don't know if that means it goes to $80, but at this point, people may feel like there may be better places to put the money. And don't forget, 119, sure, it's down from 152 or 53, wherever it was, but some people are in this thing from 20, from 10.
For selling covered calls, how do you determine position size? Example, if you own 1,000 shares of BABA, how many contracts would you sell covered calls on as a trade?
Well, that's a great question because some people feel like you got to sell your full allotment. So if you're long 1,000 shares, you can sell 10 calls against that stock, but you don't have to, right? So if you're very bullish and you kind of want to sort of meet halfway, you can hold on to 500 shares that will be unencumbered by any upside call ceiling, and then you can sell 5 calls against the other 500 shares. Or you can just kind of piece it out as, like, I would say, if you wanted to be fully short calls against that stock, maybe piece it out over time. So you could sell 2, you could sell another 2 as it moves higher. So that's a couple ways to approach it. But I remember I used to run a couple of funds where I would sell 1/3 only against any long holding. And so that was a way to basically achieve 2 things that you wanted. One, which is you want to maintain some upside potential in the underlying holding that you have. But at the same time, you also want to generate a little bit of incremental sort of income or premium from call selling. And so, that's a great way to do it. Sell 1/3, sell 1/2, and then you'll never sort of feel bad about anything, right? I always like strategies where you're not going to lose too much sleep, because if Baba keeps going, you'll be grateful that you have that extra 500. But if it pulls back, well, then now you've had some calls that you've harvested there.
Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description. Watch the full Options Macro to Micro Power Hour episode by clicking on the video here, and subscribe to LaDucTrading YouTube channel for more content.